Kitco Mining special coverage of the Mining Forum Americas is brought to you by Metallo Royalty and Streaming.
Its share price is up more than 160% over the past year, and it now has a market capitalization of more than 5 billion Canadian. GMINing Ventures is a company going places. Hello and welcome to Kitco Mining with me, Paul Harris, at the 2025 Mining Forum Americas in Colorado Springs. Joining me today is Louis-Pierre Gignac, President and CEO. Louis-Pierre, thank you very much for joining us and welcome back to Kitco.
Yeah, thank you for having me.
160% share price increase. Wow. What are you most pleased about over the company's performance in the past year?
Well, so many things. In the past year, we put TZ into commercial production. It's really marked in September 1 year of commercial production. So we've successfully, ramped production up. We've been seeing continued improved performance quarter over quarter, and obviously generating great cash flow at these prices. So yeah, we just received a full environmental permit for Oko West. So looking forward to kind of repeat this cycle of build and generate value for our shareholders with Oko West.
Okay, we'll come back to Oko West in just a moment, but let's start with TZ in Brazil, or Tocantinzinho, if I pronounced that correctly. You're looking at production of up to 200,000 ounces per year, and with that operation getting into its stride, as you say, the cash flow is really starting to become very, very important. What are your thoughts on sort of growth there? Because that project is in a region where there's a lot of juniors, there's a lot of other exploration there. How can you grow that?
Yeah, obviously we're looking to grow with exploration on our property. We've been spending $6 to $8 million this year, really identifying some targets that are within 5 kilometers of the existing pit. So we've had some intercepts that are showing signs of smoke. We're still looking for the more significant intercepts, but definitely that's kind of the mid to long-term strategy there, is to find an additional deposit, which will really allow us to keep optimizing the mine plan, extending mine life, potentially justifying some slight expansions. But for now, I mean, it's seen as that's getting it up and running smoothly, generating good cash flow. So we generated $96 million of free cash flow in the first half. We've increased our cash balance despite investing heavily into Oko West. So we're showing this model of where we can start self-funding our growth. So it's a nice place to be in at the moment.
Okay. And in Brazil, you also have the Gurupi project. How is that advancing?
Yeah, we acquired that project from BHP and closed really at the end of 2024. So in that, call it this 9 months that we've owned the project, we've been able to lift an injunction that was historically put on the project, and it was there for 8 to 10 years. So that was a key piece of de-risking in terms of seeing a new path forward on that project. So with that injunction lifted, we're looking to restart exploration activity. We've done a lot of trenching and auger drilling to identify targets. But this is essentially was seen as an option value, but now we're starting to materialize some of that option value with this exploration work. And we control essentially 80 kilometers of the whole greenstone belt. And on it, we already have 55 kilometers of soil anomaly that is begging for drilling. So we are going to be mobilizing a first rig in a few weeks' time with an RC program that's going to be really designed to punch out some of these targets and see what we got.
Imagine it's a bit too preliminary to talk about what a potential future production scenario could look like, but with Tocantinzinho at 200,000 ounces a year, in Guyana, Oko West, which we'll get to in just a moment, 350,000 ounces a year, you're looking for a substantial project there as well.
Yeah, so I mean, it must be said that we inherited a large resource to start with. So we have 1.8 million ounces of indicated already, another 0.8 million of inferred. So, I mean, as it stands now, we have a larger resource on Gurupi than we do on Tocantinzinho. So we do see the ability to grow that. It's within, it's a resource contained within 3 deposits, all open pittable. So the concept is we can easily see with actually minimal exploration success being able to justify a 200,000 ounce producer. So that's what we have our eye on. That's, I would say, is the conservative end of how we see things, and it could be much larger.
So G Mining Ventures doesn't get out of bed for anything less than 200,000 ounces?
Well, basically, to be honest, I think that's kind of a sweet spot to create good value, to be honest.
Fair enough. Now, Brazil's a massive country, so how close is Gurupi to Tocantinzinho? Is there the potential for any synergies between the projects?
Yeah, I mean, it's not physically close. It's in Maranhão state, although part of the property extends into Pará, but really on the east side of Pará. So it's physically a good ways away. But we do have synergies when it comes to, the management side of things. So whether it's environmental permitting, some of the accounting, back office things that take place, we do have some synergies there, but yeah.
Okay. Now, you mentioned in Guyana you received the final permit for Oko West. You're looking to develop a mine to produce 350,000 ounces of gold per year. Construction decision is due before year end. What will be the development timeline there, and how are you looking to fund that?
Yeah. So we received the full permit at the end of August. So that was maybe, a couple months later than we were anticipating. But yeah, that was essentially a smooth process. That was the last permitting step that we needed. So currently we're in the process of looking to put in place a corporate revolver that will supplement our cash flow from TZ to help fund Oko West. So that's something that we're working on now. And as soon as we can advance on that and close that, we'll be making a final investment decision. But, given the robustness of this project, all the avenues that we have to finance this, we felt very comfortable advancing Oko West by investing in early works construction, procuring equipment, long lead items. So in the first half of this year, we've already spent $63 million on the project, working on the permanent camp, access road, logistics, which are things we consider early works to be able to support the main construction, where we'll see a ramp up to at least 1,500 people on site. So yeah, the timeline is such that we almost have a head start, given the interim permit that we received, and we've made a lot of the procurements. So we have 190 million of the CapEx already locked in. So basically, 25% of the project is de-risked at this point. Detail engineering is close to 20% at the end of Q2. And really tracking well in advance of what we had when we did TZ. So we have that financial flexibility to invest and be able to deliver on our timeline. So,
what's the sort of total capex there? Sort of 700-800 million?
Yeah, it's 972 million. That's from the feasibility study. Will be. When we do our final investment decision, there's so much we've learned since, but it'll be turning around that number.
And with the early works you've done, what's when you can expect first production from that?
So first production is scheduled for the last quarter of 27. So that'll be during the commissioning period. We'll be, producing first gold and ramping up through commissioning over 3 to 4 months and targeting commercial production in 2028.
This is perhaps a good time to sort of talk about capital allocation, as you're on the verge of making an investment decision, a big investment decision there. With the gold price at around $3,600 per ounce, much higher than I imagine you're using in your forecasts and estimates at the start of the year. How does that impact your capital allocation going forward in terms of the amount you're investing in exploration, obviously the amount in the sort of capital investment, and things of that nature? Is that causing you or enabling you to sort of rethink things? And you mentioned about the revolver. It gives you different financing options as well.
Yeah, definitely. It's increasing our cash balance. So that's allowing us to invest more on exploration. So this year we added additional budget to the Gurupi exploration budget because we had the cash and the ability to do so and flexibility. I would say definitely what we'll want to create buffer in our financing scheme for Oko West. So if we can actually construct faster and deliver it sooner, then that means we're relying on a bit less cash flow from TZ. So having that, as additional buffer in our financing scheme. So if we can deliver it a couple months sooner, so we'll have that ability with the financing that we're putting in place and with the elevated gold prices. So
okay. Let's look forward a bit beyond that. Where do you want to get G Mining to? How do you see the company looking in sort of 5 or 10 years' time?
Yeah. Well, I mean, obviously, being having a single cash flowing asset is always a tough position to be in. One little hiccup makes people wonder how things are going. So just having 3 to 4 to 5, operating assets is what I would think is a sweet spot where on a consolidated basis, you're just generating steady cash flow and you can get through any unforeseen events smoothly. So that's where I want to bring the company. So obviously Oko West, once that's in production, I mean, we're looking at, very substantial free cash flow. So obviously the ability to keep funding without any shareholder dilution the next projects. So we're definitely trying to see if we can advance Gurupi to be that third project. Still early days. But with the positive developments that we've had already on this project, which were quicker than what we expected, could very well be the third one. So that's where we see ourselves really targeting 1 million ounces if we project to 2032, for example. So if you add TZ with Oko West and call it a 200,000 from Gurupi, we're looking at 700 or so thousand ounces. So still missing another asset in the mix to get to 1 million, but that would be the idea.
Okay. Now, your next-door neighbour, G2 Goldfields in Ghana, they're shortly going to commence a sale process for their Oko deposit, which is right adjacent to your Oko West. I presume that's something you're going to be interested in participating in?
Yeah, look, we're open to seeing how we can do something constructive for all shareholders. There's, clearly we're way more advanced in terms of our project, larger scale based on what we know now. So we do think it's something that can be integrated into our project and benefit G2 shareholders. All the infrastructure that we're putting in place becomes synergistic at that point. You don't need to be building 2 camp facilities, 2 logistics facilities, 2 power plants, and 2 of everything, really, right? So we just feel that we could bring their timeline forward by, I don't know what their timeline is. They don't have a firm one as far as I know, but I mean, I just imagine it being at least 3 years fast forward if we can integrate our two properties. So yeah, it's something that we're keen on exploring. But whatever we do needs to be accretive to our shareholders, and like we've seen with Reunion, there's a day one premium, that's obvious, but there's really the double bump from continued execution and re-rating on a combined project that benefits all shareholders at that point. So yeah, I think it's something we're keen to explore, but again, it needs to make sense for our shareholders.
As the CEO, is it frustrating for you that a direct negotiation with G2 hasn't been possible, that they've chosen to go down let's say an open sale process?
Yeah, I think most companies want to make sure that they're exploring all options. So I do think that's just kind of a normal outcome, maybe. So we don't take it the wrong way personally, but yeah, we just feel that AngloGold was a shareholder of G2. I think they've exited their position. So I think, to me, that's just an indication that a lot of the seniors don't like to build things these days. They prefer buying operating mines where they take that risk out of the equation. And with their multiples, they can afford to acquire operating assets and still be accretive to them. So I think that's kind of the way I see it, is we can create a lot of that value, and then there's potential additional re-rates through a triple bump maybe down the road. So
I think that's a fascinating point you mentioned, because with G Mining Ventures being one of the best mine builders in the industry and recognized as such, that perhaps opens up the interesting possibility of, you build the mine to the highest standards there are, and bigger companies said, brilliant, we'll love that.
Yeah.
Take you out, we'll take out whatever you've got.
Well, if it's good for our shareholders, we'll consider it for sure. I mean, we're open to that when the time is right. And, our PNAV multiple is a reflection of us having Oko West as a development stage asset. But like we've seen with TZ, through execution and keeping on track and on budget, we expect to get that re-rate again with Oko West. So that's where I think is the attractive feature right now. And yeah, the seniors obviously have much higher PNAV multiples and oftentimes maybe lack growth. So I think that's why our assets are going to be very attractive. I mean, Oko West is probably one of the best discoveries since 2021 when it was initially discovered. There's not even a handful of discoveries of that quality since. So we're clearly sitting on a special deposit that has a lot of room for growth, which we've already demonstrated with some of the drilling that we announced a couple weeks ago, last week. So,
okay, I want to let's extend out of that and get away a little bit from G Mining Ventures and look at the space as a whole. We've seen divestitures of mines by Newmont and more recently Barrick last week with Hemlo. We've seen the number of companies in the mid assets band, if you like, the mid-tier increase. There's a number of single asset companies there. They're pretty much all lacking development pipelines. How do you see the competitive landscape evolving in the gold space?
Yeah, I think you can see the prices that assets are fetching. I mean, sometimes it's a bit mind-boggling what some of these went for. But I think it's a clear indication that there's a lot of interest in the space and there's limited assets to go around. I think in the end, I mean, you would normally expect consolidation to be taking place to create larger companies that can be attractive to the investment community. I think that's what we're lacking right now in the gold space. But yeah, when Newmont and Barrick, some of the largest gold mining companies, are divesting assets that are in production, it's essentially reducing the size of those companies. So it's more of a, call it, portfolio management approach, where smaller entities can try and make a name for themselves and maybe operate differently. But yeah, I think it creates too many small companies that just isn't probably what is required at this time.
Okay, a couple of bits to follow up on there. We saw a mega merger announced last week in the copper space with Teck Resources and Anglo American. It's been a good few years since there were mega mergers in the gold space with Barrick and Newmont participating or doing that then. Is it time for another mega merger in the gold space?
Yeah, I do think so. Yeah, definitely. There's a couple of very seniors, there's a few intermediates, and then there's just so many smaller single asset producers that there's a lot of room for consolidation, in my view.
Okay. Now, with that proliferation of sort of smaller producers and with the gold price where it is, are we getting close to someone buying or building the marginal ounce too far? Or is that still a ways in the future, you think?
Yeah, it's probably a ways in the future a little bit, but yeah, I think there's not... The complexity of our industry is such that, getting permits, getting financing, having the teams to execute. A lot of times, even though the gold price is there, getting all those stars aligned takes some time. So it's not because the gold price is there that we can. There's a knob we can turn and things start moving really fast. So I think that's the position we're in. This takes a lot of time to get projects ready to be developed. Obviously, that's why we identify jurisdictions where we think we can move faster and create value on reasonable timelines. But yeah, it's not easy to just crank up additional production. And if you look at the last 3 years, physical mine supply has been flat for 3-4 years, despite a rise in gold price. So I think we have the evidence there that it's hard to turn things on.
Okay. We've covered a lot of ground during this conversation, Louis-Pierre, so maybe let's end with what are some of the key catalysts that our viewers can expect to see from G Mining Ventures over the next 6 months or so?
Yeah, I think everyone's keen to see our financing come into fruition and make a final investment decision. Obviously, seeing firsthand some of the progress that we made on Oko West, and obviously continued exploration results that we expect across the portfolio. That's part of the upcoming catalyst for the remaining of this year.
Excellent. Well, congratulations on a great 2025 today. Louis-Pierre Gignac, thank you very much for joining us today.
Thank you very much for having me.
And we have a lot more to come from the 2025 Mining Forum Americas in Colorado Springs, so hit that subscribe button. I'm Paul Harris, and this is Kitco Mining.
Kitco Mining special coverage of the Mining Forum Americas is brought to you by Metallo Royalty and Streaming.